Welcome back to BLOCKTV. It's time for Trader's Take. Now, as the crypto markets try to recover from a major price drop that saw Bitcoin fall by roughly $700 in the course of an hour, and the alt drop in tandem, we turn to our technical analyst, Joe Saz, all the way in New York, to try to make sense of it all. Oh boy, Joe, do we need you to make sense of it all. So like I said, over the past 24 hours, we went from 10, it dropped, all of a sudden, everybody is confused. Do the charts make sense of what happened?
To me personally, they do. I understand this volatility because I often say as a trader I was forged in the fire. You know, I really started trading hard in late 2017 into 20 and then never stopped. So I mean, I know what the most peak volatility looks like in Bitcoin. This isn't a complete stranger to me. Now, the reason why I'm not personally completely surprised by this is because my theory behind my analysis and why I feel like we are moving down and going to have these volatile swings is because it has a lot to do with whales and price manipulation.
Right,
So
it's a point
to
you
me,
did
this
make a couple of
is not
weeks ago.
completely unexpected. In fact, these little like psych out pumps, and let's jump into the charts and show you what I mean by like a pump fake or a psych out pump type of thing. Well, here we had, I mean, this is just insane, right? Even like a normal onlooker takes a look at something like this and just like doesn't know what to make of it, right? We had a pump, but to me this pump, right? We were obviously trending down. We were taking steps down, not really much upside action. I mean, it's mostly been sideways up, sideways down, very little and very slight recoveries. And then we had this pump, and it instilled zero bullish confidence. As you can see, we immediately started sloping down. I actually doubled the leverage that I had on my position, my short position around here, because I just know that I truly believe, taking a look at Bitcoin US dollar on the daily, that this was us topping out and creating a top, creating a lower low, which is, you know, a bull trap in my eyes, breaking this swing low here with a close, particularly below the 50 moving average, and then a break through the 50 MA again, a rejection here, a rejection here. I'm very certain that, technically speaking, we're looking bad, and you know, the external narrative running what I believe to be running the price, where the money's coming from, is also looking bad. So I'm not completely surprised by this. And back to the 15-minute, we had this humongous. I mean, in 15 minutes we fell nearly 5%. This is crazy, all right? I mean, this is just more than most people can handle. But as you can see, we've kind of leveled out. We've had a couple scares. Let's just say that the bulls around these areas probably got very scared. A lot of people probably sold this bottom. So now we're probably getting into an anger phase. So I'm expecting a little bit more of this kind of volatility. You know, we've been having a lot of these crazy wicks to the downside, a little bit of a recovery, but as you can see, we've basically just been going flat since. So it's going to be tough to say. What do I expect? I mean, we've been grinding along this 50 MA. I think it's all actually going to come down to over here, the weekly, and right here we've been sitting on an inverted hammer, another inverted type like bearish engulfing candle. So depending on how we close, if we continue this weekly close, as you can see, the body of this candle is lower than everything else before it for the past 5 weeks. As long as we continue to make these lower closes, then I'm going to be pretty convinced that this whole run up is over, and we're probably going to be coming back down. Now, the one thing I have been questioning for a long time is, when we do come down, is it going to be hard and fast, or is it going to be, you know, a nice little gentle fall? And right now it really seems like the 9,000s have a lot of support, which is what's kind of making me temporarily lean toward a gentle collapse. It's almost as if you know, the 9,000 range is starting to feel very similar to that 5,800 to 6,200 range throughout the year of 2018. You know, we kept just bouncing, lower high, bouncing, lower high, bouncing, until we finally broke through. Again, you know, I say like a stone skipping across the water. And is that what's happening right now? And I think that if there is support here, then, and we keep making these lower highs and we keep eating more deeply into this support, then yeah, I think that the bulls are going to fight to try to keep us in the five-figure range, but I just don't really see them winning. Again, I've been saying since March and April that I don't know where the money was coming from. I thought that the bulls were exhausted as it were back then. Again, is institutional money entering the space when we have allegations of a major exchange and a major stablecoin, in court fighting to defend itself, saying that it's not manipulating the market, where you have the New York Attorney General saying the opposite, and you have professors writing, reports outlining exactly what happened and how it could mathematically be done. So, I mean, if I was big money, let's say Tether's printing these $100 million packs, right? And that's kind of what was happening, for the past couple of months. Hasn't happened for at least maybe a week or a week and a half now. Now, you could say, oh, well, that's people that want to buy $100 million worth of Bitcoin. So someone gave them $100 million in cash, whatever, gold, and then they used that 100 million in US dollars, Tether, to buy Bitcoin, right? Well, the one thing there is that I'm not seeing any incinerations, because that's one thing that would need to happen. Once that US dollar Tether is used to purchase Bitcoin, then it is no longer backed, right? It's no longer backed by that same dollar, right? That dollar has now been consumed. So one thing I'm not seeing is incinerations. And the other thing is I'm not really seeing an incentive for people with $100 million to throw at a market with this kind of alleged manipulation. Now, it's a little different than stocks, right? I mean, you could say stocks and whatever, everything is the same wherever you go. I've heard people make that point, and I don't completely disagree. But in this is a 10 times more volatile space. Like, you can make, in the stock market, if your 401k is bringing you 15% a year, you're pretty much considered, in the green. You're considered, to be making good money on a 401k. In Bitcoin, you can make a 15% profit in one trade, and that lasts a day, so or more. We've seen Litecoin jump up. I think we've seen Litecoin jump up something like 50% in a single day earlier this year. So my question, to that, my response to someone saying, well, 100 million US dollars is organic, I would say, well, someone with that much money probably has a very smart money manager, someone that's paying attention to the space, and I just don't see that being justified. Someone saying, oh yeah, let's use this. Let's buy into Bitcoin right now during this parabolic run-up, when there's a number of very let's say questionable things going on in the space, financially speaking. So yeah, that's kind of my overall look on.
Well, but you kind of started off saying that you weren't surprised by this volatility, right? That if you've been in the space for a while now, and that this is something you're kind of used to. But for those that, let's say, maybe are new to the space, or newer, let's call it, and they're seeing this kind of volatility, where do you expect us to be in a little while? What is a positive future? If you're saying that we're now staying around the 9K range, which is where everybody feels comfortable, what are you seeing ahead?
Well, what I'm seeing is potential for these bounces. So let's jump right back to the daily real quick. Bitcoin US dollar on the daily. What I'm seeing is a potential, if this is support and the weekly candle closes and for a second, it doesn't look that bad, right? The weekly candle isn't something with a body like the size of 20%. As you look right up here, you can see the percentage. This candle right here is 20% move to the upside, 17% move to the upside. We're starting to take these steps back, right? So it's possible, in my eyes, that we have a bad weekly candle close and we have a support. We have a support area kind of in this 9.5 to 9,000 to 9,500 range. It's possible that we bounce around this area, even right here, and then we move back up to this 50 moving average to get rejected again, which would also create a lower low and then create that very similar bouncing pattern that we had all the way over here coming down from 20K, where we had a very distinct high, a bull trap, a crash. Now this is obviously much more dramatic, and this is more dramatic because there are a lot more people trading in this space. I mean, in the month of December alone, from here to here, there was an added 7 million Coinbase accounts, right? This was a little more organic of a run-up to me, because we had some things like that. We could look it up and see where the money's coming from. And if you have 7 million people buying $10, $20, $100 amounts, that can cause this kind of activity. So what I'm saying is, if we bounce, we've now broken below the 50 MA. Now we aren't this exaggerated in this current parabolic run-up, but bouncing up, rejected by it. We kind of broke above it, which we've done already. Breaking back down, creating a support area, bouncing up, bouncing down. I mean, I could see this playing out for a little while. Maybe not as long, probably not a year, but I think. If I was a bull, I would be really, really hoping that we could be supported somewhere in this 9,000 area. If I was a bull, what I'd want is for us to be supported in this 9,000 area while these longer-term moving averages catch up to us. Going sideways here would be pretty good for the bulls, a bullish argument. Now, being rejected by the 50 MA is still pretty bearish to me, and considering how we've acted in both directions to it, we've reacted pretty violently away from it. On the upside, and as well as on the downside, as we just saw. It would snap, sharply away. And part of part of why I also think that is because we're seeing that happen in the alts as well. You can see in this case, instead of fighting the 50 MA like we did in Bitcoin and popping back above it, we just this is Ethereum US dollar on the daily. We broke through, failed it twice, and then broke down violently to be supported by the 200 MA. And that happened across the board. And when I say across the board, I mean, just to some of the more important coins that people pay attention to. You see there, we grinded here, supported, broke down, and then violently broke down. So I'm kind of waiting for that to happen with Bitcoin. I mean, it just hasn't happened yet. I think this coming week, personally, is when I think it would happen, a violent breakdown from the 50 MA, since we're already so far beneath it. So to the newcomers in the space, honestly, I've been telling newcomers that ask me about the space, been telling them stay away for now. People are saying, oh, I want to do what you do, friends that come over, and see what I do and stuff like that. I'm saying, no, now's not the time. First and most importantly, to newcomers, the most valuable thing that you can do is dollar cost average. That means you buy $25, $50, $100 every Wednesday, whatever day of the week you want, stacking Saturday, let's say, and you don't give any care in the world about the price. You just dollar cost average for ever, and over time, you might buy some highs, you might buy some lows, but your average is typically going to be trending up because Bitcoin has a very long history. 10 years plus.
Some hostile territory. I think we can sum it up, but it's definitely hostile right now. And if you decide that you want to be in the space, you're kind of saying this is what you got to do if you want to be in the space, no matter what, pretty much, right? It's choose a day. This is the way to go about it. And it's what it is. But then kind of getting into the altcoins here. So Ethereum, I think the biggest fear at this point is to go below that $200 mark. At some point we had 191, which kind of made everybody weary. At this point we're over that, but not by very much. What are we looking out for there?
Yeah, let's jump into ETH. Let's see here. Let's see. I mean, basically what we're doing, and this is actually very bearish looking to me right now, and this is actually something that me and Tyler spoke about on our way to the upside. What we saw over here, what Tyler saw over here, was this pennant formation, or a flag, right? This would be the flagpole, and here's the formation. And so this was an indication when we broke to the upside of this that we would go up about the distance of the flagpole. So here we are from the apex of this triangle, and here we went, right? And it's almost like we're doing the same thing on the downside. This could actually look very dangerous. I would say the flag probably starts around here. Maybe it goes a tiny bit longer. So I mean, it's looking really bearish to me. Taking a look at ETH, I mean, there's potential for us to break down in time. As you can see, this wasn't just a straight breakout and then a straight line up. This was a battle. So it's possible. I'm not saying that this line is going to be one candle here, but this price drop is going to bring us back down into the low 3 digits, and that's a very dangerous territory for Ethereum. We haven't been there for a little while, but there was a lot of panic back then, and the market was still it was just I still felt like there was very little money entering the space, and it was hard to say what was going to happen. But Point is, if this is what we're seeing, and basically an inverted version of what we saw over here, and this could be very dangerous. We have one support, and that's the 200 MA right now, the 200 moving average. This is Ethereum on the daily, so this is the 200-day moving average, and that's at 187. So yeah, it's this 200 support's already been broken. It's already weakened. The liquidity that was there in the order book is no longer static. I would now call it dynamic. And by that, but the difference between those two is static would mean someone that said, I'm willing to buy Ethereum at 200, and then they just put that order in the exchange, and then they walk away from it. They don't care. They just want that order to get eaten. That is a static liquidity in the order book. And then once that support is eaten by selling action, then the filling, or whatever fills that void, is then dynamic. That's more people. It could be more people, static type sellers or buyers, but it still has to be added. It's new, fresh support. It's not the same as it was when it was, a very strong support, like filled with static buyers. So I think, with Ethereum, it's very possible, back to the charts here, that, that we've eaten through this. It's going to be easier to eat through it for a second time. I think the 200 MA now kind of trending a bit more sideways. It's possible that that we have some support here, but I really do see an inverted version of this this playing out, and that would be very bearish for Ethereum. On to Litecoin. This one's tough. This one's tough because I've been telling you that I believe in the halvening.
Litecoin, we have the halvening. It's happening in 8 days, correct? We have 8 days to have that halving.
I can't believe that we're that close to this, such a big, in the space, right? Halvenings, there's like a couple things that traders look at how people are looking forward to the Bitcoin halvening. It is all we're talking about, all anyone's talking about, the halvening, May 2020, what's the price going to be around then? Everyone knows that halvenings are scarcity increases, which mean price increases, or should theoretically mean price increases. And we've actually been seeing the opposite. That's what's really interesting to me with Litecoin, is like I was expecting a hardcore 3-week parabolic run up into insane numbers that just were going to make the market just completely look totally irrational. And so far we haven't had that. In fact, the market's been looking pretty rational. Like I said, back to the charts, we had a fight at the 50 MA, a breakdown, break through the intermediate term moving average, support at the 200. This is looking pretty technical in my eyes. I mean, we're still, the RSI is indicating we're not completely oversold. We're in a reasonable territory here. We're on a 7 of a potential 9 count, which is going to be a 9 buy. We had a 9 buy here that was eaten. It's very possible that this is just a weak little pullback, and I'll tell you, if I see a 9 buy, I'm probably getting in. I still am confident that there's going to be some sort of pop, and it might not be the 3 weeks before. It obviously isn't, but it could very well be in like a week into the halvening, or maybe something like that. So it's a risky play, because whatever Bitcoin does, typically the wider market does. And Bitcoin, I'm talking about how bearish I feel about Bitcoin, and in the same breath, I'm telling you I feel like Litecoin is a good play potentially. Now, that's like completely irrational, and I feel like what I'm saying is what I'm personally doing is a very risky play. I'm not putting much money on it because, again, I would never want to go down with Litecoin. Litecoin is complete trash to me. It's 90+% of Bitcoin source code, and I don't believe in redundant tech like that. So,
but we definitely have like 8 days to kind of see what happens in that sense with the halving. Will it happen? It's kind of like your own personal experiment, I would say, here, to kind of test the waters and see what ends up happening there. But thank you very much, Joe Saz, for going over the charts for us. We'll definitely keep up to date throughout the week. For all of you out there, keep watching for more blockchain and crypto news.
For more news and updates, follow us on Twitter